Good morning, Southern California, AM 1220, KHTS. Your host, Fred Arnold. I'm joined by Charles Lee, but before you introduce Charles, I want to introduce Karina. Karina, welcome to the show.
Hi.
Karina is a production partner at American Family Funding for Patti Handy.
Yes.
Patti, welcome to the show. Now, Patti's written 3 books.
4.
Oh, 4. I always mess that up. Which
That's
are...
okay.
Okay, I'm going to get them off by a little bit.
Okay, Money Rules 101, How to Thrive After Divorce, a children's book, and then How to Ditch Your Allowance. And Be Richer
The
Than
children's
Your
book
Parents.
is the one that...
Yeah.
So, yep. Sometimes you can share with me because then I can share with my kids, right?
Well, it's
Yeah.
like for like 5
Oh,
kids.
little, okay,
Little
got it.
kids, yeah.
So Charles Lee, our special guest, is CEO and tax director and owner of Reliant Tax Consulting. But what's most impressive about Charles is he's been with the big, remember they used to call it the Big 6, the Big
Correct.
8, I mean, when they were all around, but he was with, it's very impressive. People, Ernst & Young, KPMG, Deloitte & Touche for many, many years, and also went to UCLA.
Yeah.
Yeah,
see
go
it.
Bruins. Well, might have upset part of our audience just now.
Oh, sorry.
And he's a big Dodger fan, so welcome to the show.
Oh, yeah. Thank you for having me here today.
Absolutely. So, Patti, I'm turning it over to you.
Yeah, so thank you so much, Charles. I work with Charles quite a bit. So let's talk about some really simple stuff as far as CPA. When people generally see the letters CPA, they think that they're all kind of built the same and they just file taxes. Tell us a little bit about you and how you differ.
Correct. Well, Reliant Tax Consulting is not a CPA firm. We don't replace CPAs. We actually work with the CPAs to provide tax credits and other tax incentive solutions. There are, believe it or not, over $35 billion of tax credits offered to any business in the United States. Unfortunately, I would say about 90% is taken by the Fortune 1000 companies, so the Walmarts and the Home Depots, and less than 10% is claimed by small and medium-sized businesses. And so what my firm does is we team up with CPAs and other professionals who refer their clients to us so that even though the credits are smaller, we can provide the same services for all the small and medium-sized businesses out there.
Yeah, it really, Patti, what we talk about in the office, specializing in something. And that's what you do, because it's very complex. If you mess up the tax credit, you don't get the tax credit.
Correct. Typically, on the tax credits, you can go back in time to claim
Yes, you
refunds.
can. Yes.
It's 3 to 4 years that you can go back. After that, you can never claim those credits again. And then there's other credits like the Work Opportunity Tax Hiring Credit, where it's only go-forward basis. So you need to qualify these new hires within a 28-day period. And if you miss that, again, that new hire will not qualify. And to the extent the new hires qualify, you can get anywhere from $2,400 to $9,600 as an income tax credit to reduce the business's income taxes or the owner's income taxes.
Yeah.
Wow, that's huge.
It is big.
That's really huge. So before we get into more details, tell us the difference between a tax deduction, a tax credit, and a deferral.
Great question. So on your income tax return, you have your income, and then you have your expenses, then you have your net income, and then you apply your tax rates to get to your tax, and then you reduce your tax with tax credits, and then if there's any tax remaining, you can reduce it with cash tax payments. Now, we often use the terminology deferral. What does it mean to defer tax or defer a gain? What it means is that you're just going to pay that tax into the future, but not today. And of course, if you sell business, you sell stock of business, or even sell real estate, including commercial and personal home residences, there's a way using the installment sales method to defer the capital gains 30 years.
And I like that,
Wow.
deferring tax.
Yeah.
Correct.
Let me just say, we pay a lot of tax in this country. I don't care whether you're right, left, middle.
Yeah.
It don't matter. Every time you fill up, especially in California, you fill up your car, you buy something, you got federal, you got state tax. There's taxes every time you rent a hotel room.
Everywhere, yeah.
So having someone like Charles Lee in your CPA's back pocket to refer to
Correct.
as a business professional or as an individual that has a small business is huge.
Thank you.
Yeah. So who is your ideal client that can capitalize on this?
So they're hiring tax credits for any business that are hiring 20 or more new employees per year. So it could be an expansion of a business, it could be a second location, it could be a brand new business. Some examples are franchise restaurants, senior care, even a hospital, any business that's hiring 20 or more, manufacturing business, wholesaling, retailing, any business that hires 20 or more, depending on the industry, up to 25% of the new hires can qualify for that $2,400 credit. There's other businesses that do research, particularly startups in the biotechs, in the gaming industry, manufacturers, anybody who has research and development expenses. We can get you a tax credit of 35% on the federal side, 20% on the federal side, 15% on the California side, for a total of 35% off of the research expenses incurred. And so if you look at IBM, you look at General Motors, they're getting billions of dollars of these credits to reduce their taxes. Hey, if you spend $100,000, I might be able to get you, $3,500 to $35,000 of these tax credits to reduce your individual and business income taxes.
It allows small businesses to play on the same level playing field that the big boys are playing by.
Yeah, yeah. So what's the most missed opportunity?
Well, any manufacturer or processor, right off the bat, just because you're a manufacturer processor, can reduce your net taxable income. So money going in, money out, whatever left is going to be taxed. 9% of that is an automatic deduction under the Section 199 Domestic Production Activities Deduction Program. But unfortunately, many CPAs are not familiar with it, and a lot of the businesses miss that.
Yeah.
Wow.
Huge.
Yeah. So CPA should be reaching out to you.
CPAs, businesses, anybody who wants to reduce their taxes. Keep in mind, CPAs are good at basic tax returns, maybe some bookkeeping and payroll, but they're not specialists in these tax credits. There are, between the federal and the California government, over 90 of these tax credits, and I only specialize in about 15 of them. I can't do them all. So yes, call me, introduce your CPAs to me, and I'd be more than happy to work with them to reduce your taxes.
Awesome. And what's the best way for our listeners to find you?
Call me, 661-775-5923, or email me at charles.lee@relianteasy.com, or just look me up at Google, Reliant Tax Consulting, Inc.
Yeah, you'll see
Or
him
reach out to
smiling.
us and we can always
Yeah, refer them.
Yeah.
Well, thanks for being a great guest.
Yes,
Well,
absolutely.
thank you for having me. It's
Thanks,
been lots of
Charles.
fun.
Yeah, absolutely. Karina, thank you.
You're welcome.
Patty, good job.
Thank you, Fred.
Hope
Thank
you
you, Fred.
enjoy this edition of the Mortgage Minute on AM 1220 KHTS.
Santa Clarita's new Friday night happening place is Vine's Restaurant and Bar at the Hyatt Valencia.